people that are not online. So let's start from DXY. Last week, did you attend the last week's Wednesday section, the last Wednesday section? Anyone that attended the last Wednesday section? Hello?
Yeah, I'm here, bro.
Yeah, those people that attended the last the Wednesday section, I said price is going to make a correction A, B, and C for wave 4. So I was expecting a drop, a final drop to the downside to this zone last week. I was expecting the drop, and the drop didn't came. But I told you that if price go above this level, I said that means we are already in buy, which means wave C is already in motion. Wave C of wave 4 is already in motion. This is wave 1 of C. This is wave A of C, wave B of C, and wave C of C to the upside. So, and last week, Thursday, they came to break this level. They break the I, which means I. They break the level A, which means wave C is already in motion. This is the buy level, the certified buy level. This is the certified buy level. This is certified buy level, which means the last I, which is A. So, immediately they went down for wave 2. And this wave C is 5 wave counts. Like I said last week, I said it is 5 wave counts. Wave 1, wave 2, wave 3, wave 4, wave 5. So, checking now, if you use our Fibonacci level, this is the last low. Let me use 30 minutes time frame. If you check our 30 minutes time frame, what do you see here? We see that price came down to where? Price came down to 0.618. Price came down to 0.618. Now you see 0.618, and wave 2 is always 0.5, 0.618, and 0.786. That is why I marked 0.618 and 0.786, which means wave 2 is done. This is the wave 2 drop. So what are we expecting now? I'm only expecting a reversal next week. This is 0.5. Can you see now? I'm expecting a reversal to 0.5. This is 0.5 to this level, is 0.5 and then up. Why am I choosing 0.5? This is 0.5 serves as a demand level, Quasimodo level, QML. You might have seen QML in my chart, which means Quasimodo level, a demand level. If you look at 5 minutes time frame, this is how we do in-depth analysis. 5 minutes time frame. These are things I teach in my what is it called? In my mentorship. This is low. This is low. Sorry, this is high. This is Quasimodo structure. This is high. This is low. This is the higher high. This is the higher high. And what do we expect here? A Quasimodo level, which means price will come down to this level of low, then price will go up. Okay? This is what I'm expecting next week. Price should come down to this Quasimodo level because we already have our high, our low, then high, then lower low, higher high, sorry, not low, lower low, higher high, then Quasimodo level. Let me draw the structure for you. Low, high, lower low, higher high, Quasimodo level, then buy to the upside. This is the structure. You might have seen it on my chart. This is exactly the structure. It is a reversal structure. We call it a reversal structure. So that is the structure that is presenting in this place, a reversal, which means that they will retrace a bit and go up completely for their wave two. So the initial purpose of this higher high is because they break the previous high. Can you see? They break the previous high. This is the previous high. And price already break the previous high. So after the break of the previous high, they form higher high. And after this higher high, they are coming down again to form a Quasimodo level, which is the higher low. Higher low, higher low, or Quasimodo level, higher low. Then after this higher low, after this higher low, the next thing we are going for is what? Higher high. Another higher high. And like that. Another higher high. Okay. So I'm only doing this in depth so that you can understand how we do our analysis. So let me clean it up. Mr. Gale, please, can you mute your mic?
Yeah, sure.
So, do you understand why I mark this Quasimodo level now? Hello? Do you understand why I moved the Quasimodo level now? You can speak now, please. You can speak so that I can know that you understand what I'm doing. Mr. Federico and Mr. Gay, do you understand why? Okay. Okay, so that is a demand and supply level. We call it demand and supply. So we use it to make sure that our stop loss is small. So looking at this analysis now, looking at this analysis, I mark wave 3 to end here. So looking at this analysis for next week, this is our trade setup for next week. Can you see? And this is our stop loss. Our stop loss is here. This is what we are trading next week. Our stop loss is here. Can you see? Ratio what? Ratio 1:7. This is how we have a very small stop loss. We use this Quasimodo concept to have a very small stop loss and have a big return. A small stop loss, big return. Ratio 1:7. RR ratio 1:7. The RR risk to reward is 1:7. So we have a small stop loss and a very big profit. That means for every $100 you lose here, you are gaining $700 here. Ratio 1:7. So this is why we have small stop loss, so that we have used this Quasimodo to have a very small stop loss. So we are expecting price to drop down here and go up. So let's go to one hour. Let's go to 1 hour time frame again, so that you can know the reason why I pick that level for our take profit. The reason why I pick that level for our take profit. Okay. So looking at this, looking at wave one, since price has already confirmed the buy, and this is the buy level, since price already confirmed the buy from after breaking wave 5 of wave A. So we do something Fibonacci extension to know the next stop, where they are going to stop. So you start from here, end of wave 1, where wave 2 end, and using extension. Our target is extension. I'm coming, sorry. Our target is extension 1.618. So after wave 1, wave 2, we want to know where wave 3 will stop. Where wave 3 will stop. So we use Fibonacci extension. And if you look the Fibonacci extension, where is our extension is always 1.618, which means 161.8. 161 extension 0.8. So where did our 161 extension end is 101.78, or at least 101.75. So this is how we get the target, where we are targeting for wave 3. So after this target, we will surely come down for wave 4. There will be a sort of correction, triangle, something like this. Triangle, there we go again for wave 5. I'm coming. Then we go again for wave 5. Because wave 4 is always triangle. 70 or 65% of wave 4 are always triangle. A, B, C, D, E. Then after wave 4 is done, and it will never come to the territory of wave 1. Then from wave 4, we go up again for wave 5 to complete our wave 4 correction before we start going down again for wave 5 completely, minor wave 5 completely. So this is in-depth analysis and wave roadmap for what we should be expecting next week and upper week. So this is the extension. So what are we expecting for next week? We're expecting a buy from this QML level, Quasimodo level, to which is what level? 99.60. Yeah, 99.60, 64, 99.64 to 101.75. 101.75. This is what we are expecting. Our risk is about 60 pips. Our risk is about 20 pips, 20 to 30 pips, and we are having 200 pips reward, 200 pips reward. So this is in-depth analysis so that you can understand what is going on your chart. So let's go to this. We are done with DXY. Hope you understand. So let's go to Euro USD. We have the same structure on Euro USD. We have the same structure on Euro USD. The same structure on Euro USD. Can you see now? This is our wave 1. This is our wave A. Sorry, wave A. This is our wave A. And wave B was 3 wave count. Wave B is a correction wave, 3 wave count. We have wave A, wave B, and wave B was what? A triangle. Can you see? A, B, C, D, E, triangle. Then they go up for wave C. They go up for wave C. So this is the end of wave B. Then we want to go down for what? For wave C. And wave C is 5 wave counts. That is wave 1, wave 2, wave 3, wave 4, and wave 5. So looking at this analysis, let's go to 15-minute time frame. It's the same analysis with DSY because they are inversely correlated. They are inversely correlated. Can you see? What are we expecting next week? This is what we are expecting next week. A Quasimodo level here, QML level, QML level, which means we have our higher high, we have our high, we have our lower low, we have our low, sorry. Then we have our lower low. If you look at lower low break below low. There is, can you see lower low break below low? This is what confirms the setup. And this is the structure. High, low, higher high, lower low, then Quasimodo level, down. This is the structure. And this place will be our entry level to sell. Entry level, because it's the QML. Entry level to sell. This is how we have a very small stop loss. Our stop loss will be here. Our stop loss will be here. Then our take profit will be the next target, which is wave 3. Because what? We are combining two systems together, Elliott wave and supply and demand. We use the Elliott wave to know the direction of the market, and we use the supply and demand to have entry so that we can have a tight stop loss. This is the concept we teach in our mentorship. Though this is not every part of the concept, this is just the opening part of the concept. This is the opening part of the concept. There are a lot more things to teach in the concept, but this is just the one of the entry module that we use. One of the entry module that we use. So looking at this now, let me just clean it up. So looking at the concept now, we have our QMA here, which is the level that we are going to sell next week. This is what you are expecting. Can you see a very small stop loss? How many pips stop loss? That is about 30 pips or 40 pips stop loss. 40 pips stop loss. So to know our next level, to know the target using Elliott wave to know the target, if you're going to use Elliott wave to know our target, excuse me, this is where wave, this is the where wave B stop, then wave C of 1, this is wave C of 2 using Fibonacci extension. What is our wave C of 3? Wave 3 of wave C. This is the level. Can you see wave 3 of wave C? This is the level. So our sell with target will be here. 1125. 1125. This is where our target will be next week. Can you see? 1.618 extension. Wave 1 done. Wave 2 done. We want to know the wave 3. Then we use our Fibonacci extension to know the target. Wave 1, wave 2 of them. Our 6.18 is the target, which is will be our wave 3. Can you see now? Elliott wave give us the targets. Elliott wave give us the roadmap, the direction of the market. We use supply and demand to enter into the market so that we can have a very tight stop loss. So that is for wave, that is for Euro USD. So this is what we're expecting in the market next week. This is in-depth analysis of our expectation next week. So let me just clean it up so that it won't be messy when I'm sending the chart out next week. You will also have the video recording of this section. So let's go back to 1 hour. So this is what we are expecting next week. A very small stop loss. Can you see ratio 1:7? Risk to reward is 1:7. Then after this wave 3 is done, what are we going to expect again? According to the roadmap, we have wave 4, which will likely be a triangle or zigzag or a flat. Then we go down again for wave 5. This is wave 5, wave C of minor wave 4 or minute wave 4. This is submicro. This is minuscule submicro, and this is minute of wave 4. Then after this, we go completely up again, a very heavy buy to the upside for wave 5. For wave 5, that is what I'm expecting throughout this month. This is the roadmap of my trading for this month. So after wave 4, we go another down again for wave 5. After we stop for wave 3, we will allow this wave 4 to structure to form. After forming the wave 4 structure, then we go again to the downside for wave 5. So this is what we are expecting next week. A down move. So next we go for GBP USD. GBP USD, I'm expecting a buy to the, I'm expecting a correction to the upside. I'm expecting a correction to the upside. Last week on Wednesday, I gave this. I said price is going for wave B, and they are coming to break what? This wave A. I said it last week Wednesday. They are going to break this wave A. That this is like a expansion. We call it irregular flat expansion. Let me remove this one. We do call it in Elliott wave. We call it irregular flat. And this is what we are expecting, irregular flat. Can you see expansion? A, B, and C, where B is higher than starting point and wave C is lower than wave A. Wave C will break downward lower than wave A. So what are we expecting next week? This is what we are expecting next week. After this move to the downside, then I expect what? I expect a correction to the upside. Using our Fibonacci level, can you see is 0.5 and is 0.618. It is between this range. I'm expecting price to correct, not 0.382. I'm expecting price to go up to this level next week. I will wait for price to come into this box. Then after this box, I can sell. I can sell to the downside. This will be my first target. My first TP will be here. Then my second TP will be here. My second TP will be here. Then my third TP, if price break this level, my third TP will be here. This is a significant level. My third TP will be at this particular level, which I've already marked 2 weeks ago. I marked this level 2 weeks ago. So this is what I'm expecting. Sell. Sell to break this level A, which is the first TP. Then level B, which I already marked, a conservative level. And level C, the aggressive level. If you look at this level C, it is a demand level. It is a previous demand level. And if you use Fibonacci also, you can see it using Fibonacci also. Can you see? There is a demand level here. If you check H4, there is a demand level here. So this is what I'm expecting next week on GBP USD. So we have to rush up for time not to be against us. So this is what I'm expecting in GBP USD, up to this level, then downward. So let's check AUD USD. Let me use a window chart, which I have already. So this is what I'm expecting on AUD USD. A sell again. A sell again. If you look at 30-minute time frame, I want to pick something out on that 30-minute time frame so that you can understand the reason why I made this structure. If you look at here, there is something here. There is something here. We have wave 1, wave 2, wave 3, wave 4, wave 5. This is our wave 3, where wave 3 end. Let me increase it, submicro to minute black. Let me use black, minute, wave 4, wave 5. So if you use Fibonacci level, the Fibonacci extension, start of wave 1, then wave 2. If you look at it, what is this level? This level serve what? Extension. Can you see? The level serve as extension. Can you see? The level serve as 3.2 extension. Can you see? 3.2 extension, 3.27 extension. So that means that the long process, this long wave is wave 3. This long wave, and in the Elliott wave structure, wave 3 is always the longest. Wave 3 is the longest wave. So we are already in wave 3, and if you look at wave 4, what did I say about wave 4? Wave 4 are always triangles. 65% or 70% of wave 4 is always triangle. And what is this? Is triangle, expanding triangle. This is expanding triangle. Can you see? Expand triangle. So what are we expecting now? This serves as our what? Our wave 4. To confirm the wave 4 theory, then we choose from where wave 2 started to wave 3 using Fibonacci level. So what do we expect? They said wave 4 always stop at 0.23. Oh, Jesus. We have to fast now. Is 0.23 to 0.382. So practically, this is where I'm expecting wave 4 to stop. At this level, between this range, this is a conservative level. This is a conservative level. This is 0.23. 0.23 conservative level is 0.23. 0.23. 0.23. Then 0.23,